It's a big day for FTX. This is the very first hearing in the biggest crypto bankruptcy case yet. The new leadership team is going to be covering a lot of ground. FTX has filed several motions with the court, along with an agenda for the hearing that lays out pretty much exactly what they're asking for. A lot of these requests have to do with keeping day-to-day operations afloat. They want permission to pay outside vendors and key suppliers. FTX's new team is also looking for clearance to consolidate bank accounts and establish new ones, in part to keep paying its employees. FTX estimated that its staff is owed around $1 million for work completed prior to filing for bankruptcy. We're also likely going to get a play-by-play of what went wrong and what new management is doing to safeguard the exchange's assets, including, crucially, those customer funds.
So, Mackenzie, one of the biggest questions still is whether FTX creditors, the people it owes money to, get their money back, and if so, when they can expect that money back. Same question for the retail customers who kept their cryptocurrency assets on the platform. Are we going to get any kind of answer anytime soon on both of those fronts when the money will be there?
So we did get some answers over the weekend. Now, while we still don't have a full list of creditors or how much they're owed, we did get some clarity through initial filings. So we know that FTX owes its top 50 creditors at least $3.1 billion. But remember, FTX said that it could have more than 1 million creditors, and initial filings indicated liabilities of at least $10 billion. We're still waiting to see what the total exposure is there. In terms of how much money FTX has on hand to pay back both customers and creditors, one bankruptcy filing shows the exchange and its affiliates have a combined cash balance of just over $1.2 billion, but a lot of that cash is tied up. Now, FTX has said that it could need till January to put together a complete balance sheet outlining its total assets and liabilities. Part of the problem here goes to the inadequate bookkeeping system kept by the previous guard under Sam Bankman-Fried. So definitely going to be listening today to see whether there's any updated guidance, especially with respect to restoring those customer and or creditor funds.
Now, every day now, Mac, a new headline, again, about what another crypto firm may be feeling. We could be seeing some of those knock-on effects, the ripple effects from the FTX implosion still going on. We've heard another name in the headlines this morning. What's the latest on this contagion effect, and who's it going to hit now, possibly?
Yeah, so, I mean, just look at the Bitcoin price chart. It's falling to a new two-year low. It was trading at around $15,600 earlier this morning. In terms of the internal contagion across the FTX empire, Bloomberg is reporting that U.S. prosecutors had opened a probe of FTX months before its collapse, looking into its U.S. and offshore operations, apparently with a focus on compliance with the Bank Secrecy Act. Meanwhile, a lot of questions in the last few days about Digital Currency Group, which owns both the crypto investment bank Genesis and Grayscale Investments. Now, Genesis is reportedly in talks to raise capital after pausing customer withdrawals last week. The firm also pushing back on reports that it's weighing a bankruptcy if it can't secure the necessary funds. In a statement to CNBC, it said, quote, "We have no plans to file for bankruptcy imminently. Our goal is to resolve the current situation consensually without the need for any bankruptcy filing." Meanwhile, Grayscale, the asset manager running the world's largest Bitcoin fund, said that it won't share its proof of reserves with customers due to security concerns. And then U.S. senators are urging banking regulators to review SoFi's crypto trading activity, warning that it poses significant risks to individual investors. So clearly a lot at play.